I want you to pause whatever you are doing, look right at me, and listen to me closely. Because we need to talk about your money, your retirement, and a massive point of confusion that is costing far too many of you your hard-earned financial freedom. Every single week, I hear from people just like you. You're turning 60, or maybe you're 62, or 65, and you are terrified. You are terrified that taxes are going to eat your fixed income alive. You've worked 30, 40, 50 years, saving every penny you could, and now you're asking me, Susie, what is the tax exemption for senior citizens above 60 years? What breaks do I get? How do I keep the IRS from stealing my peace of mind? I will tell you exactly what the laws say right now in 2026, but first, we need to clear up a dangerous misunderstanding. Many of you are under the impression that the moment you blow out the candles on your 60th birthday, a magical tax exemption switch flips at the Internal Revenue Service, and suddenly your income isn't taxed anymore. Hear me now, it does not work that way. There is no automatic federal tax exemption just because you reach the age of 60. And if you are sitting around waiting for a tax break to just fall into your lap at 60, you are setting yourself up for a devastating financial shock. Let's break down the actual rules so you can stop living in fear and start taking control. When it comes to the federal government, the real tax perks, the ones that actually move the needle, do not start at age 60. They start at age 65. I know that is not what you want to hear if you are 60 or 61 right now, but you need the truth, not a sugar-coated fantasy. At age 65, the IRS gives you what is called the Additional Standard Deduction. For the 2026 tax year, if you are single or head of household and you are 65 or older, you get an extra $2,050 added right on top of your regular standard deduction of $16,100. If you are married filing jointly, you get an extra $1,650 for each spouse who is 65 or older. That is built-in protection to shield more of your retirement income from federal taxes. But wait, it gets even better right now. Thanks to recent tax legislation, we currently have what is called the Enhanced Senior Deduction, and it is a game changer for those of you who qualify. From now through 2028, if you are 65 or older, you can claim an additional temporary bonus deduction of $6,000 if you are single, or a massive $12,000 if you are a married couple where both of you are 65 plus. Think about what that means. If you stack the regular 2026 standard deduction, the extra age 65 deduction, and this new enhanced bonus deduction together, a single senior can shield $24,150 from federal income tax. A married couple can shield up to $47,500. That is how you protect your Social Security. That is how you keep your money in your pocket where it belongs. But you have got to pay attention to the fine print, because this bonus deduction has a trapdoor. It phases out. If you are a single filer with a modified adjusted gross income over $75,000, or a married couple over $150,000, that $6,000 or $12,000 bonus starts shrinking fast. It reduces by 6% for every single dollar you earn over those limits. If you make too much, it goes all the way down to zero. Now, I know what you're thinking. Susie, I'm only 60. What about me? Are you telling me I get absolutely nothing at 60? No, I am not saying that. While the federal government makes you wait until 65 for the big income tax breaks, age 60 is a critical milestone for your retirement accounts. This is the age where the heavy chains of early withdrawal penalties are finally unlocked. Before age 59.5, if you took money out of your traditional IRA or your 401k, the IRS hit you with a brutal 10% early withdrawal penalty on top of the regular income tax. The moment you pass 59.5, meaning by the time you are 60, that 10% penalty vanishes. You can now access your retirement funds without the government punishing you for spending your own money. If you have a Roth IRA, and you've held it for at least 5 years, reaching age 60 means your distributions are entirely tax-free and penalty-free. That is a massive victory for your cash flow. Furthermore, you must look beyond Washington, D.C., because where you might find immediate relief at age 60 is at the state and local level. This is where so many retirees miss out because they don't bother to check. Many states offer specific senior citizen tax exemptions that kick in exactly at age 60 or 62. Some states completely exempt Social Security benefits from state income tax. Others give you a massive exclusion on pension income or traditional IRA distributions up to a certain dollar amount once you hit 60. Do you have any idea how many states and counties offer property tax exemptions, freezes, or deferrals for seniors starting at age 60 or 65? They will freeze your property tax assessment so your taxes can't go up, or they will give you a homestead exemption that knocks thousands of dollars off the taxable value of your home. But here is the catch: the county is not going to call you up to offer this. You have to apply for it. If you don't ask, you don't get. So, what is your actionable takeaway today? How do you secure your financial future right now? First, if you are between 60 and 65, do not assume your federal tax burden is dropping yet. You need to plan your retirement account withdrawals with surgical precision. If you are taking money out of a traditional IRA or 401k, remember that every dollar is taxed as ordinary income. Keep your income below the threshold so that when you do turn 65, you don't accidentally disqualify yourself from that beautiful new Enhanced Senior Deduction. Second, your immediate homework is to call your local county tax assessor's office or visit their website this week. Ask them directly, what are the property tax exemptions or freezes for senior citizens in this county, and what is the minimum age to qualify? If the age is 60 or 62, get the paperwork and file it immediately. Third, check your state's Department of Revenue rules on retirement income. If your state taxes pensions or retirement distributions at age 60, find out what the exclusion limits are so you don't withdraw a penny more than necessary. You have worked too hard, for too many years, to let confusion and lack of planning waste your retirement nest egg. The system has benefits for you, but you must be an active warrior for your own money. Know the ages. Know the limits. Claim what is rightfully yours, and protect your financial freedom.